italiano e in inglese. So please, those who do not understand Italian are kindly requested to wear the headsets. Bene, dopo questa informazione procedurale, a nome dell'ISPI, io sono il presidente dell'ISPI, do un caloroso benvenuto a tutti i nostri illustri panelisti, il presidente Prodi, la signora Kellerman, il signor Strauch, il direttore generale Buti, il professor Tirelli. Manca, ma arriverà tra non molto, speriamo, l'onorevole Gualtieri, il presidente della Commissione economica del Parlamento europeo, che ha avuto un disguido con gli aerei, con il volo, ma ci raggiungerà nel corso della discussione. Credo che già il numero dei presenti sia testimonianza dell'importanza di questa conferenza, che conclude un progetto finanziato dalla Commissione europea, il progetto Rasta News. Questa è la conferenza conclusiva, è la terza. Le prime due edizioni si sono svolte sempre qui all'ISPI a Milano, anche con partecipazione dell'ora ministri dell'economia e finanza, il Saccomanni e Padoan. È un progetto che riunisce un consorzio di importanti istituti di ricerca, e l'ISPI è molto fiera di farne parte, in cui l'Italia ha un ruolo importante, e il coordinamento appunto è del professor Tirelli dell'Università Bocconi, quindi è un ruolo particolarmente di alta responsabilità. Il tema è Rebalancing the Eurozone towards a new economic future. È una vasta agenda, un'agenda molto impegnativa, in cui ascolteremo adesso, poi su cui ascolteremo i vari relatori. La caratteristica di questo progetto è che delle attività di ricerca, di analisi approfondita, molto dettagliata, queste attività si trasformano in raccomandazioni di policy per i governi. E questo è, credo, un punto di grande rilievo, quello di trasferire l'analisi e l'approfondimento nel campo della raccomandazione e dell'orientamento dei governi. È molto dettagliato, ascolteremo tra poco. Io credo che un punto unisce, il filo rosso che unisce tutte queste analisi e le raccomandazioni, è un filo rosso intanto di forte afflato europeista, non a caso ovviamente, essendo un progetto europeo sostenuto dalla Commissione europea, ed è un filo rosso che poi giunge alla domanda cruciale che ci poniamo tutti noi, cioè quale Europa vogliamo e come fare perché questa Europa che tutti vogliamo possa realizzarsi. Quindi è una grossa sfida, è un'importante occasione. Vi ringrazio ancora e pregherei la signora Pasi, che nella direzione ricerca della Commissione europea, che ha seguito molto da vicino in questi 3 anni il lavoro, lo sviluppo di Rasta News, pregherei di rivolgere il suo saluto. Grazie.
Grazie mille. First of all, I would like to thank Patrizia Tirelli and the Rasta News team for organizing this important event. I want to thank the panelists, and I want to thank the audience of coming here and giving us the opportunity to discuss the results of the program, of the project. Secondly, I'm very proud that the European Research Framework Program has funded this project, and this is a project which has the best researchers of the field, bringing them together and working on extremely important policy issues from the EU perspective, of EU macroeconomic and monetary integration policy perspective. So the impact of this research project will be through the mechanism of supporting informed policy making in Europe, and it has a very considerable value also in the present situation. So thank you very much for organizing this, and thank you for the panelists and for everybody of giving us the possibility. And I'm very much expecting to hear about the Green Book results. Thank you.
Adesso assume la conduzione dei lavori e la moderazione Ferdinando Giuliano della Repubblica, che ringrazio moltissimo e vi auguro buon lavoro. Grazie.
Grazie Ambasciatore, buonasera a tutti, good evening everyone. So I'll just briefly introduce the rules of the game, which everyone has agreed to. We'll speak for an hour and a half. We'll divide the session into two parts. There will be a first session which will really look at the banking sector in Europe, what's going on, the big reforms which have been pushed through and are now being implemented. And the second half will concentrate a little bit more about the future of the Eurozone, the 5 president reports, which some of you may have heard about, where are we heading as Europe, and at the same time also touching on some issues about fiscal rules, government budgets, deficits, and all the discussions which are around that. Now, I'll first, the way we'll do this is we thought that Professor Patrizio Tirelli may introduce a little bit at the start of each session the main findings of the research project he's led. He will talk for around a few minutes, and then I'll start. And it will be very much a discussion rather than having statements. So I'm hoping that our guests will interact a lot and jump in whenever they can. First of all, let me just introduce briefly who our speakers are today, or I should say at the end we'll leave around 15 minutes, 20 minutes per question. So if there is anything you really want to say, keep it, because there will be the opportunity at the end. So I'll start from my right-hand side. We have Romano Prodi, who really needs no introduction. He was President of the European Commission and Prime Minister of Italy, among many other things. Then on his right, Rolf Strauch, who's come from the European Stability Mechanism in Luxembourg. He's member of the management board there. Professor Patrizio Tirelli, who will be kicking off the discussion right now, who's the coordinator of Rasta News, the project which we are partly debating today. And then on my left, Johan Kellerman, who's coming from the Single Resolution Board, this new body which has been just created and it will be in charge of resolving European banks. She's Director of Resolution Planning and Decisions. And then Marco Buti on her left, who's the Director General of DG ECFIN in Brussels at the European Commission. We'll be joined just in a bit by Roberto Gualtieri, who's the chairman of the Econ committee at the European Parliament. He's on his way, so he will come in. So I'll ask Patrizio Tirelli, Professor Tirelli, to just say a few words about the first half of this. So the first bit about the banks, what your research findings are.
Okay. Well, right from the start, I must cut the long story very short, because we have been working on this for 3 years. And I want to summarize just a few results. Basically, the financial crisis is a story of a massive failure of regulatory framework for the financial system and supervision framework for the financial system. It is also a story of underestimation of the consequences of financial disruptions for the business cycle. and for the so-called real economy, okay? GDP, employment, and risk of deflation. Having said that, there's been a field of research in macroeconomics that has struggled to understand whether we should adjust monetary policies to take into account the importance of financial stability. Okay, and perhaps not all of you are acquainted with, some technicalities that we speak of. Taylor rules for central bankers, that is, interest rates should react to inflation expectations and to the current situation of the business cycle. And now there's been a debate as to whether we should also, central bankers should also focus, on indicators of financial fragility. But as a matter of fact, our finding is that there are trade-offs involved. They can be quite substantial, and it can be very costly for monetary policy to target both financial stability and business cycle stability and inflation stability. It all boils down to a simple thing. Since the business cycle is not synchronized with the financial cycle, then the financial cycle is typically very long. So it can go on an expansionary phases for quite a long time. And in the meantime, we can have cycles in the real sector of the economy. But then when there is a financial correction, consequences can be very sharp and very painful. So the interest rate policy would have to, say, raise interest rates to curb a credit boom when the real economy is not overheating. Okay, so it could be very costly for Main Street, okay, to look at what happened in the financial markets. And that's not advisable, okay? It is not desirable in principle as economists on purely welfare grounds. It is not desirable for political consensus or societal consensus towards the central bank and the monetary policy makers. So that's another reason why, having the regulatory system and the supervision system right is quite important. Now, the story of financial regulation in the Eurozone is a story of complete fragmentation. Okay, every country was doing it alone, roughly speaking. Now things have changed. Okay, and there has been an effort, okay, to have more coordination, to have more powers at the central level. Okay, I cannot, describe the whole architecture of the new regulatory framework, but as a matter of fact, okay, when you look at regulation, the issues are you want to preserve the stability of the single institution, but also you want to avoid systemic risks, so you don't want contagion, and you want to evaluate stability of a single institution, taking into account what happens to the rest of the system. Okay, so you must take into account macroeconomic risks and the specific microeconomic risks. Now, the architecture of the regulatory system in the Eurozone still envisages multi-layers, okay, a number of powers who must look into supervision. And so we raise what could look like a moot point, but we feel is quite important, that without strong and strict coordination, the whole thing might run into trouble in difficult times. Okay. When you set up rules, they are prepared for the system And the first thing we see, we know about financial markets is that they change and they turn into something we don't know at the time when we set the rules. So it's very important that the system is flexible and it works well when new problems come up, okay? And so it's very important that there is a shared philosophy of policy making about what are the issues which are really important when it comes to financial supervision. Okay, that's one important point. So we say too many centers have responsibility, okay? It may be difficult to get proper coordination and a unifying philosophy, okay? That's one important point. The second issue, which somehow is more related to what we are living at the time, is that rules can be conceived thinking in terms of what we call the steady state or normal times. Okay? But it's important that when you implement rules and you are away from the steady state, these rules do not slow down too much convergence to the normal times. I want to be more down to earth about this. I mean, there may be situations where bail-in, it's a very good idea, but there may be situations where if you insist too much on bail-in, okay, it's difficult to restore the stability of the system as it is now, away from the steady state, in a difficult situation.
Can I stop you there?
Yeah.
I think you've introduced a very interesting and topical subject. I should have said Professor Tirelli is from Università Milano Bicocca in Milan. So now I'm going to jump to Johan Kellerman, who is very much looking at these issues very closely from her a new position in Brussels. Now, first of all, I'd like you to explain a little bit what's your institution, because it's a new institution. What do you guys do? I mean, you're a very important board, and what are you up to in Brussels?
Yeah, thank you very much. And it's a pleasure. It's also a bit daunting to be here as a new kid on the block. We are a new authority, and we are one of the three pillars of a new framework within the European Union called the Banking Union, that was created precisely to address this regulatory fragmentation that the professor is talking about. I am a member of the Single Resolution Board, and together with the national resolution authorities in each of the Eurozone countries, we form the new Single Resolution Mechanism. And the Single Resolution Mechanism is the second pillar of this banking union I just mentioned, the first pillar being the European Central Bank, the SSM, the Single Supervisory System, now in charge of supervising the 130 largest banks in the Eurozone. We are the second pillar as a resolution authority, and the third and the final pillar is the proposed European Deposit Insurance System that is yet to be adopted. I'll tell you a little bit about who we are and what we do. We took up our duties last year, and as of January 1st, we have our full authority under the appropriate regulatory framework. So the Single Resolution Board, what is it? It's an independent agency of the European Union. We are a bank resolution authority, and our jurisdiction covers currently some 130 of the largest credit institutions in the Eurozone, non-Eurozone member states, by the way, may elect to join the Single Resolution Mechanism and so come within the system. We opened our doors last year on 1st January of 2015, and as I said, we've now resumed full responsibility. We are one part of the new regulatory framework that now governs the European Union. That was designed in light precisely of what we've all experienced during the financial framework. One of the reasons for incorporating the Single Resolution Mechanism is to overcome the problem of banks that are too big to fail, and which therefore enjoy a kind of public implicit subsidy. We provide one way of ensuring the principles of market economy are active also in the banking sector and that they operate effectively. And what is more important, our main goal is to make sure that the link between banks and the sovereigns, banks and their countries, banks and the taxpayers is severed. And to that end, it is our mission to ensure orderly resolution of failing banks with minimum impact on the real economy and minimum impact on the public finances of the Eurozone member state.
Can I just jump in on
Yeah,
this? Because
sure.
I mean, obviously, you're linking now to the point which was made earlier, and there is this new instrument, which is not that new, but it's become very new for many citizens, especially here in Italy over the last few months, which is bail-in. This idea that as a bondholder, so if you own a bond of a bank, if this bank runs into trouble, you may see your investment completely incinerated, lost. You may lose all your money. Now, can you tell us, I mean, obviously this is something which has shocked a lot of people because they were a little bit, they were thought, oh, look, I bought something from a bank, this is going to be safe, my money is safe. Can you explain what's the rationale behind bail-in? Why does the European Union insist that we should have bail-in?
Yeah, I can tell you that. Bail-in is, by the way, one of the tools that we have in our toolbox. And as an answer to the financial crisis, the BRD, the relevant regulation that introduces these tools, has created actually 4. So bail-in is one of them. There's also, we have the powers to sell good parts of a bank to another party. So we don't have to wait until everybody agrees, but if at a certain point we feel that the time is there, we can do that. We have also the power to create a bad bank, so there's much more that we can do. But of course, bail-in is a very powerful instrument and an instrument with a lot of impact. And as I said, the whole idea behind the BRRD, behind these new rules, is to make sure that it is no longer ultimately the government that has to step in, but actually the parties that in a market economy share the risk of a bank. So in the first place, not bondholders, but in the first place, shareholders, because they are the main bearers of risk for any business and also for a bank. And yes, potentially also bondholders can be touched by this bail-in instrument, but the idea is that one thing needs to be entirely safe, that is the deposits of depositors. So there is a full guarantee for the depositors that have put their money in a bank up to 100,000 euro. And secondly, another important element of resolution of what we do is to prepare banks and to make sure that if they fail, their critical functions can remain untouched, so that the vital role they play in the economy, payment systems, that people can basically still get to their money.
Can I now raise the objection which was raised earlier on, which is this idea that bail-in is all well and good in a kind of stable situation where the economy is in good shape and people are not panicking and everything is fine. But in a situation like the current one, where economies are still very fragile and perhaps there is some agitation on the financial markets, maybe for reasons which have got nothing to do with Europe, for example, China or emerging markets or the Fed, this can be a destabilizing mechanism. What's your view about that, which is, I think is the point which was made earlier?
Well, I think that the bail-in tool and the resolution mechanism is not the only measure that was taken after the financial crisis. And I think we all recognize that many markets are still, as you say, fragile. So that is absolutely true. At the same time, it is also important to stabilize the system, to make sure that we reach this stage where no longer the problems of banks will, as it were, have an effect on the health of the state and of the health of the real economy. So I still think that it is a good tool. Of course, it is an impactful tool, but I think that the thinking behind it is aimed at making sure that at least the mistakes of the past are not made again.
And so that it's not the taxpayer which pays for bank resolution.
Yeah, indeed. Yeah.
That's the point. Now, can I ask you, Rob, to jump in a little bit, because you also have an institution which is a little bit older in a way. Can you explain to the public, because I mean, a lot of people maybe in this room see all these institutions popping up and I'm not really quite sure about what's going on. How is your institution involved in the banking sector? I know it's not your primary responsibility, but there is something which you can do for banks. Can you just explain a little bit of that?
Sure. Yeah, I mean, it's also an indication of European integration that we are not the oldest institution anymore on this stage, which is good to see, even though we are only now. We were founded in 2010. Now, let me say the way I look at it and what is our role, our crisis experience actually, which also went through very tense moments. I mean, essentially, the way, if I look back, it's a combination of things that you need to resolve a crisis situation and to rebalance, which is essentially three things. I mean, you need to stay focused on a path of growth. You need to strengthen resilience of the economy, and you need to create stabilizing forces. This is what we did eventually. But this is what worked throughout the programs. I mean, so we have the adjustment programs where in the first place, what we do is there's MOUs, there's policy reforms.
MOUs are
memorandum of understanding.
So when a country asks for money
When a country asks for money, then what happens is that there is an agreement on policies that the countries would take. There is an agreement on the economic path that should be, that is envisaged. There are reviews that ensure that that path is indeed taken and the reforms are done. And then as a third element, yes, we give support, and we give support also to banks, but more generally, and we give it at rather favorable terms. And that eventually has helped in a number of countries that have tapped us to turn around the situation and to stabilize the economies, to stabilize the financial system. I mean, the latest case is in the case of Greece. So this is the way I see us working and how we help the overall process.
Can you tell us, I mean, one example which is very interesting is the one of Spain, where you've played a very active role in. Now, I mean, obviously Spain is in good shape at the moment. Obviously there are big problems in terms of debt, in terms of unemployment, but the banking system seems to be on a much more solid footing than before. Can you tell us a little bit about that process, what conditions were imposed, how the banking system has changed, and why it was helpful, if at all?
No, eventually what happened in the case of Spain, where a program that we started, and that is our only facility that we have that was specifically targeted to the financial sector. That makes it special. The other programs are more general adjustment programs. In the case of Spain, this was a financial assistance program targeted to the financial sector. This program, first, it happens, the general framework is as in any other program that we have. We have this memorandum of understanding with a policy conditionality that must be. So there are policy reforms that we requested. In that case, those policy reforms are primarily directed to the financial sector, but you improve surveillance, you improve legislation, you improve the overall setup, you create the right structure, say, for resolution. That was done in Spain. Now we have a new authority there that took over that part. But that is what we did in the first place. Then the second thing is that, yes, we supported in providing money, 41 billion, for recapitalizing the banks. But as recapitalization works, you need to have a business plan to create a sound bank, and then you receive money that supports this. So this was essentially also what was done and what was monitored in the context of the program. And that, I think, helped very much, or effectively helped to recreate and to stabilize the banking sector in Spain. Linked to that, and that also relates much to the work that Marco Butti is doing, there was a lot of, also in parallel, the Spanish government did a lot to strengthen the overall economy. And that is the basis for nowadays, the good Spanish performance, growth performance, which in turn contributes to the profitability of the banking sector. That is what it is all about, and that the banks can go out again and start lending.
Now, you've been called into, my question for you is, I mean, there's been a lot of debate about the role of the ESM, and some people would have liked to see the ESM take a much more proactive role in adjusting the financial system. For example, in Spain, the money went to the government, which then gave it to the bank. So it was, and some said this is actually worsening, it's actually reinforcing the sovereign bank doom loop, as people put it, because you're lending to a sovereign, and that raises its public debt, and then the government has to lend it to the banks. Now, how do you see the role of the ESM evolving over time? Do you see, I mean, are there lessons we can learn from the last crisis? I know, I mean, you must have thought about this quite carefully, given your role.
I mean, the ESM is one of the institutions. By the way, there is a multiplication here about acronyms, and it's only a small subsample of the many acronyms that have been created throughout the crisis. So it's good that here we have the opportunity to explain also what these various institutions are doing. But on the ESM proper, it is clear that this was, okay, in the crisis management response was, let's say, the key new institution. This went hand in hand with strengthening the surveillance and coordination also on the crisis prevention side. So stronger and more credible rules on the public finances. We have the whole banking union issue. So I think if one looks now at the economic and monetary union and you take, let's say, in a comparative statics, compared now to before the crisis, we are clearly in a much better institutional position. This does not mean that I mean, the work is finished. On the contrary, we may discuss it later on the Five Presidents report. But the ESM was created in a situation of emergency. It, I think, is an important response. At the same time, it is clear that if one looks a bit in perspective, it's not probably the end of the story. The Five Presidents reports, also the Commission, President Juncker has been clear on this. We see an evolution of the ESM in terms of, let's say, broadening and becoming more institutionalized. I mean, the ESM is based on an intergovernmental agreement. So, okay, just not to be too technical, what does it mean? It means that instead of using the normal community procedures where we have qualified majority, so a decision-making which is rather smooth and effective, here we have decision-making which is a bit more cumbersome, typical of the intergovernmental solution. So we see as a Commission, eventually, when we think about completing the architecture, the ESM coming into the fold of the and naturally, I mean, if one looks at the ESM, President Juncker has identified the ESM as the embryo of what will be in the future a euro area treasury. So if we think about completing economic and monetary union, we have, let's say, Ministry of Finance at the European level. The ESM is clearly the embryo of that. So if you think about euro area treasury and you think what could be the extension of the roles of the ESM in perspective, this would be not only lending in distressed conditions as they do now, but maybe providing the safe asset, being embedded into we see it broadening in the Commission, most likely, eventually, to has responsibility for the surveillance of public finance and the implementation of the rules. We also see the external representation of this being ensured by this new institution. Clearly, this is, let's say, beyond the very short term, but I think it's important that the Vice President reports indicate a bit the direction, that we see the completion of the architecture of economic and monetary union and being, let's say, the ESM evolving into an even more systemic role. Clearly, this does not go without controversy, and it implies a deep debate. But I think it's a good thing to put on the table, looking a bit at the medium to long term.
We'll look at the future in the second part. I want to go back to the past, and one thing you said about how many of these institutions were created in a bit of a haste. Now, a few days ago, there was a very interesting report by the European Court of Auditor, who looked at what the European Commission did during the last crisis and concluded that it could have done things better. For example, when it comes to recommendations to different countries, there were now. Looking back at it, I mean, you were in the war room throughout, for much of the crisis, as you were in the Situation Room, deciding. What do you think were the mistakes that the Commission, the biggest mistakes which the Commission? Do you agree with the report of the European Court of Auditors?
You have your interlocutor just beside you, President Prodi. We did part of the journey together. I think that was largely before the crisis. But look, we are going to look at in depth to the Court of Auditors report, and I am sure that a number of criticisms are well taken, and things could have been done in a more effective manner. At the same time, I think, and probably I said it last year at the same event here, but let me repeat it for the sake of the audience. I think the risk always is, let's say, ex post rationalization, forgetting that, as you put it very rightly, we were in the war room. The Situation Room of the CNN, that's where and we were ticking, you worked with the FT maybe at the time, and I remember looking at the website of the Financial Times with a clock ticking on the crisis and the, let's say, for how many days, if not weeks, would take before the end of the euro. This was the situation at the time. So now, yes, we can look at things. Have we done everything right in the case of Greece? Probably not. We could have maybe tackled the issue of the debt earlier on. But then the question of the systemic consequences come in a situation in which you do not have the kind of tools to respond and to manage a crisis that we have now. Have we taken? Have we had it right in terms of the austerity and possibly we were too tough on recommendation on the fiscal adjustment, but it was in a period. Period gives an indication of a lapse of time. It was in a moment in which the issue of the survival of the euro was at stake. So I'm ready and to see whether, I think there has been criticism also by the president of the ECB, Mario Draghi, saying that, okay, we got the sequencing maybe wrong. We could have taken other things done first, the institutions to stabilize the system, and that is all well taken. But I think losing this historical perspective, which is looks at the near-death situation that we were at that time, I think is a fundamental methodological mistake.
Well, I take your point, and I appreciate your candidness in your reply. There was Rob Strauch, and then I'm going to go to President Prodi, because you were also.
No, I just wanted to add to this. I mean, the auditors do their work, and it's important. And hello.
Yeah.
So I certainly, the Board of Auditors does an important work. However, I think apart from the real-time situation, it's important to recognize the fundamental doubt that many had on the framework like the ESM framework can work for Europe. And here I think the basic lesson, as I said at the start, is it worked. And that, I think, is a real, very fundamental lesson that we should be taking and should not be forgetting about if there's individual criticism. And a few things actually worked better than we had expected. Market access of countries in programs worked better than we had expected, partly. The fact that this moral hazard problem was much less than one had thought up front is another positive lesson that we could take in the crisis. So I think we should also put these elements into perspective and not forget what we overall achieved, which I think is very important.
President Prodi, I'm gonna ask you two questions. First is, do you agree with this assessment that there was a lot of good which was done actually during the crisis, and that actually we shouldn't be overly pessimistic about the crisis response by the European Commission, or are we being a little bit too kind to your former colleagues in Brussels? And then the second question is, going back to the issue of the banks, some people say banking union is something which we would have not even dreamed of only 10 years ago, and all of a sudden has come in a very messy and incomplete way, but is a big success. Do you agree with that statement, given your, the fact that you've been following this European project for many years indeed?
Well, first of all, I mean, all the panels, you need to have an ignorant. I am proud to be that one, because it's so technical, this panel, that I don't know even if everybody could follow that, because, you are so full of acronyms. It's difficult to understand the temporary events that you had in that, and the real fact that all this intervention now, I shall try to be less, destructive, but all this intervention, they have been communicated one by one, separate, and there is no idea of a systemic action to control the crisis. This is what, to be very, very sincere, because I repeat, I'm telling that because, of course, the technical ignorance of the problem, but clearly we are in front of a great question, as you raised it in your first question. Let's say the necessity of having a common philosophy in front of a crisis. And second, how to intervene with practical decisions because of the need to save the system. Third, this was done in a moment of change, of crisis, in which the systemic framework was not yet done. This is, I think, the aspect that we have to tell people. Otherwise, we don't understand what is, the three pillars that have been depicted here. The problem that we have to read that there was a terrible, urgent event because of the crisis. The fact that there is a common currency and different regulations, the necessity to have one regulation and to do it step by step because of the difference country by country. This is the problem of how was so difficult challenge. And taking account that, I think that a good work has been done, because because it's we have to think. And you were correct to remember that this was done under a perennial crisis. It's difficult to have correct intervention or accepted by everybody when the hefty and all American papers say every day that tomorrow there will be a collapse of the currency. So in this picture, we have to judge. The judgment a posteriori is not bad in the sense that now, let's say, there is the idea that the system could work in the future, could have a common discipline, but seen from outside, from, for example, the banking people, you know, point of view, they really are still not yet informed day by day of what is happening. They have this some sort of external knowledge of the problem, and this is what we have to make a remedy, because otherwise we shall never have a clear picture of the future. You asked me also if in the banking system,
Banking union.
the banking union, it's as, let's say, made better off or worse off the situation of the banks. You know, this was the question. Well, not easy, because the work must be completed. The level of anxiety inside the banking system is increasing, you know, in the sense that they don't know. It's like when you have a change in some legal regulation, you know, in which you don't know how is applied in the future, and if it is equally applied in the future. And so you listen always the complaint of the single banking responsible that the treatment and the regulation has not been fair among all the protagonists, and in this case also among the countries. You know, so I think that we need a clear manifesto, or let's say a clear set of clear statements of not only the single tasks of the group of people represented here, but also of the criteria that are followed, and explain them, because otherwise you will always have an uneasy financial system that, you know, any, say, new regulation that you find, any, it will be accepted only as with reserve, and only as some sort that is forced, you know, is not. So to be brief, this new regulation is not yet embodied, and must be explained also from the political point of view. Let's say, clarifying the goals and the limits of all this set of regulation. You know, this is, I think, very, very urgent, because otherwise it will be, you know, a problem. Because I am not convinced. Well, I am convinced that the worst is over, but you know, you can, as you had in the last few months, let's say, a challenge from outside, and you have that the banks, the countries and the banks have been hit in a very unexpected way. That as for the limits that I have, I am not a banking expert, I am only a general economist, but when I analyze how the markets have hit the different banks, it's really a problem of, I don't say a wrong message that has been given, but of a system that in which you have not yet clear say the criteria in which you judge a bank. This is in my opinion. I repeat, I want to have some sort of non-technical opinion of technical aspects, but all the technical decisions must be taken in the perspective of the consequence, of the real consequence on the banking system.
Can I ask you a final question before we move to the second section? You say, do you think there is a perception out there that the rules were not applied equally to all countries in the banking system? Do you think it was just a matter of timing? I mean, there is this issue that, for example, Spain was able to use European money to rescue its banks, or even during the crisis, there was a lot of public money, government money, which went into rescuing banks, for example, in Germany. And now there is a complaint that Italy is not able to do the same. Now, do you think this is just a perception, or there is a substantive criticism to be made here?
No, there is substance. Chris, I don't think that it's only perception. Of course, there was a different ability of the different government, political, let's say, different opinion or maybe mistakes, but clearly you had in the same system different regulation and different behaviors, you know, and this makes a lot of difference, you know. You cannot be punished if you didn't agree to a previous proposal, and then you have a systemic obstacle to perform your everyday life in the bank, you know. So I think that, I don't think that it was a mistake of the Central European regulators, but I think that this double treatment has brought a lot of tension inside the European financial system. This is what I think.
No, I just wanted to add, and what I'm surprised, or what I think, is that when you say there is no single treatment, I think one of the consequences of the crisis and the steps, the political steps were taken, is essentially, yes, that we do have a single institution like the Single Resolution Board or the Single Supervisory Mechanism. We have a single rule book that was released.
The goal is
that indeed creates a common framework that is applied to everyone. So I think, from my perspective, it's rather an achievement than a mistake. That is the way I would look at it.
No, I don't say that the goal is perfect. I started telling you necessity of a common philosophy, a necessity of unified behavior. You know, this is the problem is that doing this step by step, as has been done, you know, I think maybe by necessity. The situation is that you have not the perception that this goal has been achieved. I simply, I told you that I have limited my intervention, giving you the perception from outside, because I think it's necessary in this dialogue to have, and I don't say that I am right. I say that this is a perception that we have had, you know, in this effort that is indispensable. Let's be clear, if you want to have a common currency working, we must have one philosophy and one behavior, you know, so I completely agree. But you asked me what has happened in the past, not which are the goals. And I tell you that the perception is what I told before.
Marco Butti, and then I go back to...
Yeah, no, on the bail-in issue, because I know it's a very delicate and very hot issue, but I think it would be good to put things a bit in perspective here. Okay, first of all, it was recalled at the very beginning, when you come to resolve the bank and you have and you apply the bail-in, you have the protection of the depositors up to 100,000 euro. Now, this is an important innovation, because before the new rules, it was not clear at all that this was the case. So, I mean, thinking of bail-in as something which makes things worse and riskier as such, I think is not correct. I say the first point. The second point, we have a bit of perception, I see the discussion here in this country in particular, that bail-in falls from the sky all of a sudden without any announcement. The new rules, I mean, what was the evolution of the implementation of the rules during the last years? I mean, there was in the midst of the crisis, the one with the Financial Times ticking clock, given the systemic risks that were involved at the time, there was the possibility of public money injections in the bank with, let's say, rules which were, let's say, softer because of the systemic risks than what you had, what you have today. Now, these rules here, and the Commission came up, it's back in August 2013, where the bail-in was clearly indicated and the new rules were announced and since then implemented, with the judgment being that the systemic moment of the crisis was basically over, so we would go back to, let's say, more normal circumstances. So, and the bail-in at the time linked to the state aid rules was that clearly shareholders were first on the line and subordinated bondholders also. Now, the BRD, one of these the terrible acronyms, on the one hand, strengthen the capital of the bank. So the banks today are in a much better position than they were before the crisis. So this is one of the elements which makes which should make the public more confident. So they are better capitalized, much better capitalized than they were before. And it decided back in 2012, 2013 that there will be the strengthened bail-in kicking in on 1st of January 2016. So all these were, as I said, did not fall from the sky. They were adopted unanimously by all countries, and the implementation was well announced and well, I think, well explained. Now, I understand also, and I agree with President Prodi, that the perception is a different one. One has, however, to ask also in terms of preparation, in terms of making public aware of what has been done in the meantime, and let's say in a sense finger point a bit the right institutions for what has been done, what has not been done.
Okay. So
to clarify even more, you know, because when the bail-in came out, the message, you know, it was done in a period in which there was more confidence, so on and so on. But the perception was, in many cases, that at the end of the story, the situation of the bank could have been much better in terms of solidity, but the price was not to give money to the economic system. You know, this was when I say, look, we have to also analyze the political consequence. The normal, serious analysis was that okay, maybe the banks are a little safer, but the price is that the economy has been stagnating even more because of that. This is the point that we have to discuss also, because there is not only the banking, but also is the economic life of a country that we must take account.
So I'm going to go back to Professor Tirelli. He has a final point, and then I'm going to ask him also to introduce the second.
Okay. So about the bail-in, 100% subscribe the philosophy of bail-in, and also I think it's important to control or to avoid state aid. Okay, but going back to this issue of non-performing loans, on the agreement on non-performing loans in Italy, it is often claimed that it's good for taxpayers. We don't make taxpayers pay for the wrongdoing of bankers. It sounds very, very well, very fine. I agree with that in principle. But if you risk implementing the right policy at the wrong time because of these times we are in the sense that if I look at the interest of the taxpayer, okay, then on one hand I see what the taxpayer is not spending for supporting or relieving these non-performing loans. But on the other hand, if due to this agreement over the next 3 years we lose 1 point of GDP growth, and that is going to be permanent, then let's look at the cost for the taxpayer. Because this is a time where we have still a very fragile recovery and near deflation, okay? It's a very risky period. So I'm not so sure that we are really making, really working in the interest of the taxpayer over the near future, okay? Maybe in 20 years' time, this will be, the cornerstone of a new regime, and we look back and we see, okay, we start stopping, bad habits. But perhaps we start stopping bad habits at the wrong time. And I worry about that. Okay, and so I'm supposed to go over again. Okay. Second part concerns. Sorry. The second part of our discussion should concern more macroeconomic policies. And when this project started, austerity was quite controversial. There was a very hot debate. Public debt is the problem in the periphery of the Eurozone, in the southern countries, or the key problem. We need fiscal discipline to restore confidence, bring financial markets to work. And then, the other wing was, conveying just the opposite message, okay? With austerity, you bring down demand and you cannot restore growth. And, can have Nobel laureates such as Paul Krugman or Joe Stiglitz that were supporting this view. And as a group, we started with this view, okay? We had a very strong view that austerity was again, the right policy at the wrong time. I'm not saying we changed our minds, but as a consequence of the research we've done, we found that the crisis was basically a huge demand shock in the US. It was a demand shock for the Eurozone as a whole, certainly for the core countries. But when we disentangle, the periphery from the rest of the Eurozone, then we find that there has been a slowdown in productivity growth in coincidence with the financial crisis. Okay, we don't have the standard demand shocks. It is the supply that has stopped working. Okay, the supply side of the economy that has stopped working. And there has been a slowdown in productivity growth that you don't see in the north. That's a big difference. So in our view, the key problem is to restore growth, and you want demand side policies, and also you want reforms in order to make the economy more flexible and more able to introduce new techniques of production to become more efficient. And that's the name of the game. And we want banks to support credit to innovative firms. We want government policies geared towards this. But this may require, some fiscal flexibility. This is not the right time with near zero inflation and very slow growth to insist on reducing debt. It's well known that, I don't want to be provocative, okay? I take seriously the efforts of the Commission. I think many things have been changed, there has been flexibility. What I'm saying, it was a discovery to us, it was a true consequence of innovative research, and we were not expecting that. It's a new finding for us, and we think it's very important. We think it's very important to use flexibility to achieve this goal in the medium run, okay? And then there are other things which should be said that were unthinkable before the crisis, okay? Before the crisis, very low inflation was the name of the game, and fiscal discipline was necessary, and deviation from fiscal discipline was seen as the evil, okay, in the Eurozone, the potential evil in the Eurozone. But instead, we have had countries that were badly hit by the crisis and that had been, very disciplined on fiscal grounds, like Spain or Ireland, okay? And we have had current account imbalances, okay, between the north and certain countries of the south, not Italy, and this was completely neglected. Okay, because financial markets, were pointing in the direction where putting financial flows towards construction, okay, in Spain, for instance, okay, consumer credit, okay, again, not particularly productive uses. This was completely neglected. So that's another point. We must look at the future when we go towards the new normal, and I want to be optimistic about this new normal, not just slow growth forever. We must shift, I feel, towards full macroeconomic surveillance and not just control of debt and deficits. Okay, we must look at what happens to the financial situation. We should look at what happens to domestic demand in a country. We cannot have countries that insist on having 8% of GDP as a surplus, as an external surplus. Because if you have a surplus in one country, one way or another, you must have deficit somewhere else. Okay, why not in the rest of the Eurozone? And then another shift of philosophy is that debt is not synonym for guilt, okay? Debt is an outcome of trading, okay? And it's a joint responsibility for the creditor and the debtor, okay, to be disciplined. That's also important. It implies quite a big shift in the philosophy of policy making, okay? And I want to be very brief, okay? Another important point, we should reduce debt through fast growth of nominal income. I said nominal income, so I mean real growth, and we must resume to inflation, okay? We should also be aware that inflation in the medium term could be possibly higher than the 2% objective, okay? Or we are very far from that. But at some stage, we should balance the pros and cons of having temporarily higher inflation instead of having temporarily higher taxes. This is another important point. And I think there is another point which is not being discussed so far, that is the importance of political consensus for the Eurozone construct as a whole. And this has been crumbling, and we should be aware of that. And one problem is that countries or the public opinion feels that there are nationalistic disagreements, that quite often these show up within European institutions. Sometimes they prevent solution of problems, or sometimes the solution of problems can look biased. This is also an important point. That's why I was worrying before about these multi-layers, okay? Because there could be conflicts that come up and along nationalistic lines. We have many national regulatory institutions, going back to the problem. But this brings me also to another point.
Can I stop you there?
Okay.
I want to go back to Marco Butti, because I think you've raised a number of points which I think is very well equipped to answer. And in particular, this idea of fiscal rules and rules. I mean, looking forward, we've discussed the crisis, but let's look at the future. Are the fiscal rules in place in the Eurozone the right ones? Are they credible? Should we think of additional rules, like, for example, on current account surpluses? This means looking at the economy as a whole rather than at the government level only. The country which Professor Tirelli was referring to was Germany, of course, with 8% of current account surplus, which is spotted by the Commission but doesn't lead to any punishment. I mean, are the rules in place fit for purpose or not?
Well, let me take one point from what Patrizio said, and also at the very beginning, and I think President Prodi recalled this issue of a shared philosophy. I think this is called shared philosophy, called the common narrative on the crisis, and I think this is a very important one. It's a very important point. I think we still miss a common view on the origin of the crisis and on the appropriate policy response. This is not a question, an esoteric question. It's a very essential one. Let me give you my feeling on why we have these diverging philosophies. And basically, diverging philosophies are those in the north, let's call it like that, in inverted commas, see that fiscal profligacy and lack of reforms in the south were the origin of the crisis. and they point to diverging competitiveness and so on, and not reduction on the debt. And those in the south see that the austerity imposed by the north, the lack of domestic demand in countries with high surpluses are basically responsible for the crisis. Now, I think what we need to do is to bridge these two. There is an element of truth, but it's partial in both views. Why have we had these diverging views? This is basically rooted in the first 10 years of EMU. We, I mean, very naively thought at the beginning that you share a single currency and everything comes together naturally. More commonality, more sharing of values. The opposite has happened. Basically, during the first 10 years, the anesthetic effect of the euro has led to countries of the south, let's say, stopping doing the reforms because things looked pretty good, no need to do unpopular structural reforms. Interest rates came down, interest payments also, so you could compensate by higher spending. So the automatic fruit of EMU, the automatic benefit was largely squandered. At the same time, you had countries in the north who became, let's say, over-competitive and you know, basically based their growth on external, not on domestic demand. This has led to a divergence, and here I talked to Professor Prodi, industrial economics, has led to a divergence also in the economic structure of the countries. So more intensive in non-tradables, the south, housing, more intensive in tradables in the north. The additional point, and this is important for the share philosophy, is that this led also to divergence in they say, social preferences and political values. So the Schuld for the debt, as well as, you know, the not particular incentive to do structural reforms in this. So we have, I think, to bridge this thing here. So the debate on the rules and the adaptation of the rules, I think going back to the time President Prodi was president of the Commission, I remember very well. I was honored to work with him. Was that, I mean, we should, I think, have let's say, I think more power in terms of institutions, and President Prodi called out the authority. I mean, less on the, you know, strict rules, but this implies a rebuilding of trust between member states, between institutions, which is still not there. So there is, I think, work to be done in order to rebuild this mutual trust.
Visto che ho dimostrato di sapere l'inglese, parlo in italiano adesso, che è molto meglio. Se no prima mi venivano i complessi di inferiorità, no? Capite? Proprio prendendo la prima e la seconda parte del dibattito, quando io dicevo, ma il problema era il passaggio di queste regole. Cioè, io mi ho sempre colpito come improvvisamente si mettono nuove regole alle banche e valgono per un paese in cui il credito bancario fornisce l'85% dei mezzi alle imprese come in Italia e meno della metà come in altri paesi. Capite? Questo, io ripeto, sono economista industriale, non bancario, quindi questo mi ha colpito moltissimo perché ha fatto fallire un sacco di aziende. E rispettando e andando verso la filosofia comune, intendiamoci, quindi l'obiettivo dei regolatori qui presenti era un obiettivo perfetto, ma per la miseria non si può mica applicare la stessa medicina a uno che ha la polmonite o uno che ha il mal di schiena, insomma, no? E anche se riguarda parti simili del corpo. Cioè, questo è il problema che mi sono posto in questi mesi. Dico, abbiamo certo un sistema economico diverso, sarà meno perfetto di quello del nord, ma le conseguenze sul sistema industriale sono state, di questo passaggio, sono state molto dure, perché eravamo forse, ripeto, più deboli o diversi. Ecco, questo era quello che io volevo dire prima, quando la necessità di avere l'obiettivo comune, ma il buon senso degli aggiustamenti che si debbono fare. Ecco, capite, perché adesso, questa è una riflessione politica, se volete, più generale, ma questa tensione che si è prodotta nel sistema bancario sta anche cambiando la percezione dell'Europa. Cioè, quando nei nostri dibattiti fino a 2 anni fa, parlavamo dell'Europa a 2 velocità, noi intendevamo quelli dentro l'euro che volevano fare di più e quelli fuori dall'euro. Al massimo intendevamo est e ovest. Adesso le 2 velocità sono diventate nord-sud nella mente dei cittadini europei. Guardate che questo è un dramma. Questo è un dramma, no? E questo io volevo prima dire, attenzione, le regole, certamente dobbiamo arrivare a regole comuni, ma qui ci vuole il senso di solidarietà, e qui riprendo quello che ha detto Tirelli, perché non poteva dirlo meglio, il senso di solidarietà che quando ci sono i cambiamenti bisogna capire le diversità degli altri e non imporre una filosofia, anche se assolutamente giusta, e alla quale noi dovevamo arrivare. Ecco, questa era la riflessione politica che io volevo fare legando la prima parte e la seconda parte del dibattito.
Volevo passare la parola a Roberto Gualtieri che ci ha raggiunto. Si è parlato ora di, diciamo, futuro in qualche maniera. Secondo me è un dibattito di cui si parla troppo poco al momento. Dove stiamo cercando di andare come zona euro? C'è stato un rapporto dei 5 presidenti, che però pare sia stato messo in un cassetto e verrà tirato fuori chissà quando. Qual è la sua impressione di dove si sta andando e se effettivamente si arriverà in quel punto? Perché si sente parlare di queste istituzioni rafforzate, comune, poi andremo nel dettaglio magari con gli altri panelist, però cioè, le vedremo mai queste proposte? Sono destinate tra 10 anni a faremo un rapporto di, non so, dei 15 presidenti o dei 25, non so.
Tanto buonasera, mi scuso per il ritardo, problemi di aereo, ho perso un volo, quindi sono felice, vi ringrazio dell'invito. Ma il rapporto dei 5 presidenti è importante, a nostro giudizio a mio giudizio ha una divaricazione forse eccessiva tra le misure, diciamo, a trattati costanti di breve periodo che sono lì identificate, che sono di ambizione piuttosto limitata, diciamo così, a parte l'elemento garanzia dei depositi, a completamento unione bancaria che invece è piuttosto significativa, e le misure più ambiziose che sono proiettate in un futuro più distante. Adesso arriverà questo white paper e quindi manca un po' una fase intermedia che a mio giudizio potrebbe, diciamo, avere elementi anche ambiziosi anche sulla base delle regole attuali. Tuttavia io penso che noi ci stiamo muovendo. Io ho una visione naturalmente preoccupata e consapevole dei limiti, ma credo che occorra anche essere consapevoli dei passi avanti che si stanno realizzando significativi. Solo pochi anni fa, dopo la crisi, è stata, diciamo, rafforzata la nostra governance con 3 elementi molto significativi, cioè 3 pilastri, diciamo così, meccanismi di stabilità che hanno consentito di sostenere i paesi, diciamo, in difficoltà sui mercati dei titoli sovrani, rafforzamento delle regole del patto di stabilità e cantiere di unione bancaria, e poi il 4º pilastro parallelo è stato la capacità della Banca Centrale Europea di usare fino in fondo le proprie prerogative. Tutti questi 3 elementi hanno dei forti limiti. Il primo è intergovernativo, e si è visto questo quanto rende difficile implementarlo in modo efficace. La Grecia, contraddizione tra politica interna dei paesi che sono membri dell'ESM e obiettivi politici nazionali. Il rafforzamento del patto di stabilità è troppo ancora basato su regole, e tuttavia il paradosso che la riforma del patto di stabilità ha anche introdotto la flessibilità. Nel momento in cui si faceva quella nuova regola del debito, a mio giudizio poco giudiziosa, diciamo così, nello stesso tempo si introducevano nel regolamento, rispetto alla versione precedente, dei meccanismi di flessibilità che oggi, anche per un'iniziativa politica meritoria, diciamo così, del governo italiano e dei socialisti e democratici, possono consentire di cominciare a vedere un embrione di governo politico delle politiche politiche fiscali e non puramente di applicazione cieca delle regole inevitabilmente prociclica. E poi l'unione bancaria è qualcosa di serio, non c'è dubbio che costruire un'unione bancaria significa anche affrontare una differenza tra i sistemi bancari europei e c'è una difficoltà a percepire che non c'è solo il rischio di credito, ma ci sono anche altri rischi e quindi magari poi gli stress test fanno uno scenario in cui sì, il PIL cade del 4% e quindi poi magari altri paesi che hanno, altre banche che hanno derivati in pancia, ma quelli non si riescono a misurare, non ci sono ancora i parametri, magari c'è un'esposizione verso paesi emergenti che poi si scopre che vanno molto peggio invece del PIL dei paesi che si riteneva sarebbe dovuto andare male. Quindi il tema di un level playing field all'interno dell'unione bancaria esiste e tuttavia io penso che ci si sta muovendo in questa direzione. Ecco, adesso la scommessa è come. Io vedo tre fasi, una fase più ambiziosa di riforma dei trattati che spero il libro bianco identifichi un certo grado di ambizione, una fase intermedia dove penso occorra portare avanti proposte legislative anche a trattati costanti. Noi abbiamo proposto delle convergent guidelines, una capacità fiscale all'interno del bilancio dell'Eurozona, eccetera, ma anche una fase attuale dove io penso gli strumenti di flessibilità che disponiamo all'interno del sistema di regole attuale ci potrebbe consentire di cominciare a costruire una politica fiscale più degna di questo nome. Il concetto di fiscal stance dell'Eurozona è molto importante. Implementiamolo. La procedura per squilibri macroeconomici, che identifica anche altri elementi, è importante. Quindi disponiamo di strumenti e se si rafforza la dimensione politica del governo dell'euro, come anche il processo che ha portato all'elezione di una commissione politica sulla base di una scelta dei cittadini e di un patto di coalizione definito tra partiti politici europei. Cioè questo processo in atto io penso, sia pure con tutte le difficoltà politiche molto forti che vediamo davanti a noi, possa consentire una graduale evoluzione, una costruzione di un embrione di effettivo governo politico dell'euro che io spero producendo degli effetti, avendo un'efficace output legittimacy, possa anche costruire un consenso politico maggiore per dotarci finalmente di quegli strumenti che a regime, una moneta unica, di cui una moneta unica avrebbe bisogno. Scusate, ecco.
Ms. Kellerman, I'm going to turn to you because there was a lot of mentioning of completing the banking union. Now, obviously, you are a living example that the banking union is being constructed, but there are still some elements which are missing. And one element which is a big sticking point is the joint deposit guarantee. Do you see that as a realistic outcome? Do you think it's necessary as a regulator of the Eurozone, or can we live happily without this instrument?
Well, I think, I don't know, I'm not going to answer yes or no. What I think is that it's desirable. Because as we have concluded already in the first stage of this debate about the past, but also when we talk about the future, there is a need for this common narrative, but there is certainly a need for these common rules, and there is certainly a need for common trust in the financial system. As we've seen, deposit guarantee is a very important element of that. And I think that can only gain if it becomes a European level. So we would be welcoming an agreement on a European deposit guarantee system, certainly. Yeah.
Okay. And turning to Rolf, I want to pick up something which Marco Butti said before on the future of the ESM. How do you see the future of your institution? I mean, he was mentioning the possibility that these are the seeds of a European treasury. Now, this sounds like a grand name. We've seen many false dawns before announcing that, yes, we were just about to have some quasi-federal treasury. Is this something which you see the ESM becoming one day, or we should all calm down and just let the ESM be what it is?
I mean, I appreciate also and we appreciate the ideas that are out there on DSM. From my perspective, I would like to get back to what I said at the start, right? Which is this combination of having clear guidance, strengthening resilience, and then creating stabilizing forces. I think that's at least a way also of looking at the 5 presidents report, which I think creates this kind of vision. And here you have, on the one hand, you have the fiscal rules that is giving guidance, and well, there's some stringency, I thought, also to be meant to be in there in order to create resilience, right? The second element that comes in there on the resilience part is risk sharing. And risk sharing has banking union, has capital market union. So what are the channels of risk sharing and private sector risk sharing across countries in allowing for transfers, allowing for flows? That's an important part of risk sharing. We need to get that going. And that is what is part of the overall concept. And then at another stage, at the third stage, then we get to the stabilizing forces and the question, what can the public sector do? What can the ESM possibly do at some stage when we are there, when trust has been built? Trust will be built based on rules, based on the fact that there is resilience. And yes, and then one can think of central fiscal capacity at the European level. My hunch would be that it can be thought without permanent transfers and without debt mutualization. And that would be also an element in the overall picture, but it's important to have the three elements of the picture in mind.
Well, I think we should stop here and let the public ask some questions. So I'm going to take questions. If you can identify yourself, so say your name and maybe your institution, and please stick to questions. Do not make statements, because they are often very boring. So ask questions, and possibly short ones. So I see the gentleman at the back first, and
good evening. My name is. Can you hear me? Yes? Okay. My name is Fabio Franchino. I'm from the University of Milan. My question goes to the lady member of the Single Resolution Board, and also to Professor Torelli. In my view, there's no way that you have a credible banking union without a credible fiscal backstop. You know, you said the guarantee fund, but you clearly need a fiscal backstop to provide credibility to a banking union. How far are we from there?
okay, I'm going to take a few questions, and yes, the gentleman there.
Guido Maglianico, I'm an industry lawyer. Looking forward is also looking backward, also, not only, of course. And I'm asking myself where the segregation of commercial business banks from normal credit banks is an issue, and if yes, how?
No, can you, sorry.
Yes. Production finance. So I'm asking myself where the segregation of commercial business banks from normal credit banks is an issue, and if yes, how urgent?
So is this about Glass-Steagall and dividing? Yeah, you're right. Okay. Yes?
My name is Salvatore Valentini. I'm just asking one question about the Capital Markets Union. In the Commission's project, the Capital Markets Union will be supervised by national regulators who amount to 28 in number of states, maybe 50 in number of regulators. The Five Presidents report hints at the necessity that there be one single regulator in Europe. How far away from this target, to take the second part of the previous question? I think this is very important.
Okay, we'll now give some answers. I'm going to start with you. Questions on the fiscal backstop. Can you have a banking union without a joint fiscal backstop?
Well, we do, huh? We are there. But it is true that, as I've said, these pillars of the banking union, there is a lot still under construction. As Mr. Butti has said, even the decisions were taken in 2013. The fact that there are already two institutions up and running is actually a miracle in European Union terms. It's very fast. So there is still a lot under construction, clearly. And we are not there yet. We, of course, the fiscal backstop is an element that has been on the table for a long time and is still up. Currently, the focus is on the European Deposit Guarantee Scheme, which, as I said, is something we welcome a lot. But do I think that the resolution mechanism is credible at the moment? Yeah, I certainly do. I believe that the instruments that are there are effective and that they can work. And in an ideal world, everything would be ready and done by now. But as we've seen, we're not in an ideal world.
I'm tempted to say that, you know, when everything fails, in the end, it is the taxpayer who must come in, step in and find a solution, you know. One way or another, you could not call it a fiscal backstop. It could be the central bank. I mean, think about the US. No problem like the Eurozone in terms of, you know, fragmentation of institutions, national divides, you know. But in the end, the Fed, you know, implemented a toxic asset relief program, you know, when it was the time, and they acted swiftly, you know. And if you in another field, you can think about what President Obama did with the car maker industry. You know, what worries me, you know, is not that we are not really writing down, you know, provisions for everything that could happen, because it will always be sort of incomplete contract. There will always be unforeseen consequences or events. You know, the next crisis will be different from this one, and hopefully we will not see it, but, you know, it might happen. The problem is that we need flexible institutions, okay? So fragmentation is the real problem in the long run. We can stay as we are for some time. Okay. Then there is another problem. You mentioned the issue of a single guarantee for bank deposits. You know, why is it so difficult? We should say that because there is a concentration of national government bonds in the hands of the national commercial banks, and you don't want, you know, taxpayers or someone don't want taxpayers in the north. That's how the story goes, to provide guarantees indirectly for the governments in the south through the guarantee on deposits. That's the issue. It's a very hot issue. In principle, we will want to have, you know, greater diversification of bank portfolios in terms of government bonds. Okay, but if we force, and there is a proposal in that sense, if we force diversification right now, we don't know what will happen. You know, because you can imagine Italian banks, you know, going to the market and selling Italian bonds. What will happen to interest rates? Okay, again, right policy at the wrong time. That's a risk.
I'll ask Gualtieri about, yes.
Does need a backstop, and it was part of your agreement. That is very clear ECOFIN statement and commitment to that. And I think it has been a lost opportunity now to build a bridge financing mechanism, not on the basis of ESM, but on the basis of national credit line, because this does not breaks the link between sovereign banks, but might potentially increase it. So this is an issue, and a very important issue. As far as the so-called risk reduction, I totally agree that it has to be dealt very cautiously. There is a work going on at Basel, and any attempt of front-loading would be absolutely not wise to do in this moment. But I have also to say that that the mutualization pace of the EDIS, of the single deposit guarantee, is very slow. So I mean, we moving within Basel framework on this would not create this mismatch. We have another mismatch now between the retroactivity of the bail-in rules and the fact that some security have been issued before those rules are being placed. We have the mismatch between the fact that probably we don't have enough capital requirement, MREL, everything in time for the BRD. So we have now another kind of mismatch. It also should be addressed by making the full use of proportionality in implementing the current rule, as Elke Konitz said today also. I welcome that in our committee during a hearing. And finally, on bank structural reform, we have a proposal, we have a legislative procedure that takes into account, I think, the specificity of a European universal bank model, which is important. One needs not to be ideological, while addressing some important issues, while the prop trading, like the Dodd-Frank Act, and also making possible, if necessary, if banks are too big to fail, too complex to be rolled, to have a separation, but not an automatic mechanism of separation. So I do think we are going toward a balanced solution. It's very difficult. It's very difficult negotiation in the European Union. We will see, but I think that it's better to have a common legal framework at the EU level than different national solutions.
Who wants to answer on the regulator?
Maybe Maybe, well, I think if you listen to Roberto Gualtieri's and also the rest of the debate, I mean, one should have the perception, if you pause for a moment, that the degree of sovereign sharing of sovereignty that has taken place and is taking place is absolutely phenomenal. I mean, again, I think we tend to lose a little bit the perspective and things. Yes, it's extremely difficult. I mean, the negotiations are tough. I mean, we go through nights and nights of discussions, and eventually we find agreements, or we do not find agreement, we postpone, and then on the bridge financing, the single resolution fund, we will have to move into the ESM becoming the backstop eventually. It is a very difficult situation. At the same time, I think the degree of sovereign sharing is very, very important, and this, in a sense, makes me reasonably optimistic on the follow-up of the crisis. And I mean, when we discuss here, there are technicalities a lot, but I think it's a fair conclusion that when you talk about banking union, you talk about capital market union, is in terms of political sovereignty, it is even more encompassing than the single currency per se. So clearly, we go to the heart of what a member states and national sovereignty are. So inevitably, you have a lot of tensions and different interests. On the capital market union, the regulators, I mean, capital market union is a different animal than the banking union. A banking union, it is clear, it is built on 3+1, if you put in also the single rule book institutions. Capital market union is much more diversified. It is extremely important as well, because I mean, one of the points that we are having here, and President Prodi said it before, that we have with the banks, is that Europe in general is too much banco-centric. And it is, if we think about the crisis of investment that we have now, the fact that we do not have enough investment, thinking that the banks would be there ready to finance investment, it's a bit an illusion. So what we need to do here is to create alternative source of financing, and capital market union is precisely for that. It is a project for the 28, it is very clear, single market. It has a particular relevance also for the functioning of economic and monetary union, essentially because it will help to recycle excess savings from Germany and other surplus countries to the rest of the Eurozone, not via debt, which is the problem that we faced in the first 10 years of the crisis, but via equity. So it will make, let's say, this integration much more, solid, and will help to make the prospects of growth and risk sharing much more powerful.
Now the question is, do we need a single regulator?
No, I think we start the proposal of the initial proposal of the Commission is not with a single regulator. I think it is a process. Eventually, we will see in this gradual, let's say, in this gradual establishment of the capital market union, whether at a certain point in the future this will be needed. I mean, it is work in process, and we have to do with this with a light gradualism.
That was a very Brussels-like answer from
for once.
For once.
Supervisory convergence.
I'm going to take the last 3 questions, and then we're going to draw to a close. Yes, I see the gentleman there.
Cesare Valli. Thank you very much to all the panelists. It has been a very interesting discussion. There may be several questions to ask, but I would like to point my attention to another point. If I compare the way the US have reacted to the crisis and the way Europe has reacted to the crisis, I have to notice that the time frame it took to us to try to build an infrastructure, which is very good news, but it's to me too long. I mean, we lost a lot of time to face this crisis. So it's very good news that we have now a better infrastructure to face these kind of things. But my question is, don't you think that the bureaucratic structure of Europe as it is at the moment is acting too slow to face unexpected problems. Thank you.
Very clear. The lady at the back.
Hello, Ildid Andrea, Sciences Po student. I want to ask you about the deal that was struck 2 days ago between Brussels and Rome on the so-called bad bank. So we have a way of get rid of the non-performing loans. They will be securitized, tranche, and a government guarantee will be attached to the most senior tranche of these banks, of these non-performing loans. Now, in the rosy scenario, it's going to be fine. In the non-rosy scenario, the default rates of these non-performing loans will rise, and public money will go into this to back the guarantee of these loans. Are we gonna make taxpayers pay again for banking?
That's very clear. Final question there, and then.
Hello, I'm Carlo Capra. I work for Oliver Wyman. So we work in a number of projects around the creation of the banking union. So I thank you for giving the opportunity to share a bit of the overall framework in place at the European level. Two very quick questions. The first one is a public awareness of the different responsibility at European Union is a clear challenge. So people don't know what's happening. There is a fragmented view on what are the different responsibilities of ESM, the resolution board, the ECB, the European Commission. I would like to ask, what's the plan to increase the public awareness around that? And the second one, very short, to the President Prodi. I think you mentioned before that one of the drawbacks of having a more robust banking sector was that they didn't take into account the different peculiarities of different nations. So the fact that you had more robust banks had a very strong implication for economies such as Italy. But what would have been the option? Should we tend to a more fragmented European Union with different rules for different countries?
Okay, it's very clear. So first question is on the US and the bureaucracy, Europe. Yes. Who wants to answer that? Yes?
At least I would like to make one remark to that point. Certainly there is a central government, which is a difference to a European setup, but it's also important to recognize that throughout the crisis, when decisions had to be taken, they were eventually taken, and that one should acknowledge. I don't know how many newspaper reports I have read that this will not work out and there will not be a decision, there will not be a majority for X or Y, and in the end, we always got a decision, we got the programs that we had, so that at least needs to be acknowledged, and then you can still say maybe it could be better, but that's, I think, a long-term process that I think one should clearly acknowledge.
Okay. And on the guarantees, do you want to answer? Because you've defended state support for the banks.
I'm very worried that in the end, it will be more costly for the Italian government not to provide more guarantees, because I worry that there will not be enough recovery in bank credit and not enough growth, you know. So with this agreement, we will have less credit growth. Okay, so we don't support bankers, and we lose in terms of growth. You know, it's a short-term trade-off, and in the long run, it would be, you know, it's good to support, not to support bankers in this way. But we are getting out of a crisis where bankers were subject to fierce competition. Okay, in order to, you know, expand their assets, and it was a global failure. Okay, it was a responsibility of policymakers, it was responsibility of supervisory institutions, it was responsibility of bankers, and now we should ask ourselves, okay, what is better for society as a whole? That's the true issue, okay? I don't want to make a moral point about, bankers made the wrongdoing and then, if I understood your point, okay?
That's my forecast, that the Italian state will make money with that, so the result will be positive, no negative. Yes. And the decision-making system, I don't think is particularly more complicated than national or US or other area of the world. I think banking union, for it, is simply new. So it's something really new, striking, it's been a revolution. So people have to understand who decided where is the place of accountability. So and it's a process of change. I don't think it's much more complicated or inefficient than other systems.
Skellerman, I'm going to ask you how you're going to make yourself aware to the world of your existence, like coming to these conferences and
coming to this conference, talking to journalists. But clearly, there is a need for authorities to explain what they're doing and to tell as much as possible to the public. In the case of resolution and everything it means, it is not just us, it's not just the national authorities, the national governments, but in this case it's also the banks. They should also make clear what's going on, what the products they are selling, what are the risks. So we specifically asked them as well to be clear about this and to communicate what they're doing in terms of resolution planning, for instance.
Okay. And the final question and the final word to Professor Prodi.
Oh, yes. Ma
parliamo in italiano.
Very simple, cioè molto semplice. La prima cosa era il timing, cioè condivido il fatto che la regola finale deve essere comune, ma il problema è la velocità di adattamento nei diversi sistemi. Questo è un fatto assolutamente elementare. E poi, quando ci sono queste diversità strutturali, è indispensabile una solidarietà macroeconomica, cioè intervenire in altro modo, perché prima diceva giustamente Tirelli, ma qui abbiamo una differenza di produttività fra nord e sud del sistema, no? Ma guardate che la produttività, quando un sistema economico ha il segno meno, cala anche la produttività, perché la fabbrica che lavora a metà della sua capacità produttiva ha una produttività infinitamente inferiore di una fabbrica che lavora al più della capacità produttiva. Ora, voglio dire, si è invece forzato l'adattamento di un sistema senza tener conto di questa diversità e quindi timing, e senza avere rimedi macroeconomici e quindi solidarietà per capire la diversità.
Va bene, I think we can draw this session to an end. Please join me in thanking all our guests. And thanks to ESP for hosting this debate, and we look forward to having another one next year.